Another live stream. Today we're going to talk about inflation. I am back in Canada as well, so welcome back to my Canadians. I'm glad to link up with a lot of my friends and family and connect on some of the missing pieces on my business there. I haven't been in Canada since December, so it's nice to catch up on everything that's been going on and getting caught up with the world. Inflation. So interesting data. We've seen our inflation coming down pretty aggressively. It's been great to see a lot of the trending data showing inflation heading back down in the 5 and 4%. However, I think inflation is going to rip back. There's a lot of signs right now that say to me that inflation is not done, and that despite the low energy crisis we've seen now, I think the data we're going to get into the summer and into the fall is going to be a lot different. As gas prices continue to skyrocket, taxes are skyrocketing. It's like, I guess in Canada, the equivalent of $6 something a gallon. We're like $1.55, $1.65 a liter for gasoline here. So that has effects on the price of everything. I'm going to talk about how that plays out for real estate in a good way, actually. Our minimum wage, our federal minimum wage is going up to $16.50. Our Ontario minimum wage, $16.65 in Ontario, $16.65 federally, I think it is. But that's a huge difference. When you're paying almost $17 an hour as the minimum wage in Ontario, that's going to have some significant impacts on rent, because again, more than half of the renting class makes within 20% of minimum wage. So if you're making $16 or $17 an hour right now, it's way better than the $14, $15 an hour you're making on current minimum wage. When they jump minimum wage, that's going to have basically putting more dollars in your pocket. You're looking at potentially an extra 50 to $100 a week, $400 a month. That $400 directly translates into more buying power for rent. And so there's a housing crisis in Ontario and in Canada. And since there's enough units, the available units will get bid up. People used to be able to afford, $1,000 a month for an apartment. Now they will find a way to pay $1,200 or $1,300 for an apartment. It will drive things up. We should see new data coming in. All the unions are asking for 10, 20% raises. The CRA and all the government workers are going on strike. There's a whole bunch of push. Interesting, this earnings season, we're seeing that businesses are saying, hey, we're able to charge more and people are paying it. Meta, as an example, for their Instagram platform, offered a $20 a month Canadian plus tax fee to be on a monthly fee with Instagram there, and millions of people. They raised billions in the first day in revenue. People are willing to pay. There is money out there, and people are not, I think these prices aren't as fixed as people think. I think there's more push that's possible. So that's good for these businesses that can pass these prices on. It's really bad for inflation, because I think inflation data is going to spike. We're going to see it go down. I think we're going to have a rip up. I hope that we beat it down. And I think that we will, given rates are so high and there's so much punishment. But it seems to me that people are adapting. And it takes a lot longer to break people and bring inflation down than I think the government's expecting, and that's going to be a bit of pain. So, Kenward, Kenward says hello. Grinder says, Tom, thank you for hosting. Would you rather buy properties in a corporation versus personal name if you're flipping, or buy and hold? Thanks. So, okay, so let me just finish my thought here on inflation, and then I will answer that question. I think, and maybe I'll answer this question first, and then I'll go back to the inflation here. If you have any questions, throw them down below. Happy to always answer as many as possible here. Okay, so if I'm buying properties, it depends on my intent. So if it's my first ever property, Grinder, I would say just buy a personal name. There is no need to incorporate. You have a good insurance policy. You're pretty much equally protected. If you have a good insurance policy in your personal name, there's some distinct advantages to having your first rental properties in your personal name. And that is because on your personal side, you can use those losses in the first couple of years of owning the property. Is typically losses when you set up any business, and real estate is no different. It's like any other business. And what you'll have is deductions. And those deductions are great for, being able to offset that day job income. So I do think your personal name is better. It's easier financing, cheaper financing, cheaper insurance in general. Keeping a corporation alive is complex. It costs thousands of dollars to set up the corporation. It costs thousands of dollars in accounting and legal fees to keep the corporation open every year. And for one property, I think it's not worth it. It's going to absorb a lot of your cash flow. For two properties, again, probably not worth it. Going to absorb your cash flow. I think under 5 or 10 properties, in Canada anyway, buy them in your personal name. There is not a real distinct great advantage to buying a corporation until or unless you're setting up a big business. Like if you're going to set up a big flipping business, then I think it could make sense. The CRA, my understanding is their guidance on flipping in your personal name is that it's active business income, which means it's taxed without the benefit of 50% being tax-free in a capital gain. So you don't get capital gains treatment. That's the biggest distinction. Active business income in your personal name versus in your business, very much similar. You know, at the end of the day, it really is one of those things where it's, I got a super chat. Thank you so much. I'm gonna get to that super chat first because super chats get priority always. So appreciate the $15 USD super chat. It means a lot. It helps tell people that the channel is valuable and it gets people coming on here. And I'm a few minutes late already, so YouTube's probably like, you know, most of my crowd's waiting at 7 o'clock to join, and I wasn't there today. I was a few minutes late. I was actually dealing with some issues on a couple of our Florida properties right now. As I was there, I was dealing with like 4 or 5 different people I was messaging all at once. So had a lot of things going on. Apologies for that. A bit late. I've got, I feel like I'm drinking from the fire hose lately because I'm trying to catch up on everything. All my businesses in Canada. I'm trying to get through all the things I'm trying to do in Canada, while at the same time wrap up some loose ends and get things, you know, really moving on the US stuff. And so not being there physically means I have to rely on other people to get things done for me. And so there's a lot of communication and back and forth. And so anyway, that's why I'm a bit late today, is just so much going on. I had to finish things I was doing. All right. Talking about structure. So from a tax perspective, and again, I'm not a CPA, so, you know, don't necessarily hold me to this, but you asked if I'd rather buy properties in a corporation versus personal name, if flipping or buy and hold. So I think that it's a complex question to consult your accountant because every situation is different, but by and large, if you're starting out and you don't have if you have a good job making 150 grand a year and you're maxed out in your personal tax bracket, I think it can make more sense to set up a corporation, again, because the corporation's at the max tax bracket. So any rental income, any passive income you have inside your corporations is taxed at the same rate as your maximum personal tax bracket. So if you're not at the top marginal tax bracket, let's say you've got like, I don't know, 50,000 in income, it probably doesn't make sense to incorporate right away. Now there are some advantages if you're gonna do a flipping business and you wanna do this as an active business. Well, then you get the small business active deduction on the first $500,000 in net income. Your tax rate drops to 13, 14% in Ontario. In Alberta, it's like 5% on the active corporations. So that deduction is pretty great if you're gonna run a small business flipping. Now that's a business. That's not passive income. That's an active business. And flipping, I think the CRA's opinion is pretty clear. Flipping properties, if you're doing lots of them, you're doing volume and you're not holding them for very long, that is an active business. And so you will get the deduction. Active business is great because if you're going to shelter that income inside of that corporation, you're planning to do a lot of deals and you're not planning to withdraw that personally. You want to keep letting it ride onto the next flip and the flip after that and grow the corporation into something substantial, property to property, as you continue to grow that little empire. Then a flipping business is fantastic because you're going to pay a 13% corporate tax on the first 500,000 of income. You can find a way to keep under 500,000 with deductions and deferrals and depreciation schedules and things like that. So I think 500,000 is really like, you probably do like $750,000 in net, which is like millions in gross, right? That's a substantial good start to a flipping business, I would say. And by the way, you and your spouse should never go together on these corporations. Pro tip, you get a corporation, your spouse gets a corporation, don't go cross. You each get $500,000 as long as neither of you own either of the corporation. So if your spouse has an active business and you have an active business, you each get the 500,000 business exemption. If you are together on a business and then you have your own on the side, it's 500,000 cumulatively across all the shareholders. So a lot of people make the mistake of putting their spouse on the business. Don't do that. I made that mistake. Super stupid. I could have $1 million if my wife had one corporation. I have a corporation. Way cleaner. We each get 500,000 in deduction limit for the, I guess it's 12.5 or just under 13% active tax. Now, when you take that income out of the corporation, again, you're gonna credit for the tax you've already paid inside your corporation, but you'll get another tax personally when you withdraw that, depending on where your tax bracket is. You may get no tax on that dividend. That dividend may have substantial tax if you're in the top tax bracket. So think that through. No matter what, the most efficient way to earn money or to build your wealth is through capital appreciation or capital gains. Because again, half of all capital gains are tax-free. Business income might have a 12% tax in the corporation, and then they're 20% personally. So you may pay collectively 35% in total tax by the time you take those dollars out of your corporation. So just think that through. Capital gains are preferred. Even inside of a corporation, capital gains paid inside the corporation get credited when you take it out personally out of that corporation. So if you pay capital gains tax inside of a corporation, you don't pay it again when you take the money out of the corporation. You get a credit for all the tax paid, and it would be considered a capital capital gain income in your personal name as well. So it'd be half tax free, which is a huge benefit if you're planning to do the long-term buy and hold strategy. The rental income, that part of the business would be, top tier passive income, but the top tax bracket. But you would then have, that advantage of that large capital gain being pretty much, half tax free, half taxed. So capital gains are the way to make your money if you can. Okay, super chat. I always go to super chats first. If you shoot a super chat, tongue tied. If you shoot a super chat, you always get priority, and I really appreciate it because it keeps the channel. It's basically the only revenue the channel's getting. The ad revenue is like peanuts. Jamal says, I'm having troubles with an annoying building inspector due to old tenant complaints. Can you tell me some of your worst situations you had with local municipal governments to make me feel better? Oh, I've got so many stories. So many stories. And I know lots of other investors some have worse stories than I do. Many have worse stories than I do, but it's a recurring theme in my municipality. And in pretty much every municipality I've talked to investors, the municipality is focused on trying to create, the best possible housing, and their focus is not the profit of the landlord. And so they will make you go to extreme lengths. I'll give you an example of something I'm dealing with right now. We have a duplex that has the back of the building. It's a 1.5 story, not a high, the half story has a studio apartment in it. There's a set of stairs at the back. And so their decision is that they're going to treat it like a commercial building, which again, it's a duplex in a residential area. But the entire back of the building had 2 windows and a patio door. And they're like, hey, we don't need to close the entire building up and fireproof it. It's like, wait, you want me to rip out windows and close the entire back of the building so there are no windows and no doors? Yes, because, well, what if, fire breaks out and it burns their stairs? I'm like, it's an 8-foot drop. You could literally just shimmy off and you'd be all good. Anyway, if there was a fire that broke out, it would burn through the floor. But no. The windows and the patio doors have to be closed. You can have a door, by the way. But what if the tenant leaves the door open? Oh, they don't care about that. They don't care about that. They want to see that it's completely fireproof. So we had to remove windows, remove doors. We had to drywall over everything, insulate everything, and close it up. It was a huge pain in the ass right at final inspection. That became a thing. And inspectors change their minds. Some inspectors say, hey, it's fine. Other inspectors' interpretation is, no, you gotta deal with that in this way or that way. I've had inspectors change halfway through a building inspection, and we framed everything the way that they wanted it. And the new inspector comes in and says, oh no, we don't like that. We don't like the way those clips are tied in. We don't like this, we don't like that. Rip the drywall down, we wanna see this, wanna see that. So taking lots of photos and videos is super important because, again, ripping things down costs you weeks in delay because you're waiting 7 days to get the inspector back in. Most permitted projects, on average, take 4 times as long as unpermitted jobs. So if you can avoid permits by reducing the scope of work to floors, paint, kitchen cabinets, vanities, toilets, none of that requires permits. In Ontario, you can change windows even, as long as you're not changing the opening, no permit. Door, not changing the opening, no permit. Roof, no permit. A lot of things you don't need a permit for, it's only structural. Now in Florida, they have wind from hurricane damage, so changing windows, doors, permit, roofs, need a permit. So it's actually worse for permits in Florida, interesting observation I found, than in Ontario, Canada. But building permits are the worst. Every real estate investor I know despises them because you're going to be working with your engineer, working with your draftsman to draw plans up, submit the application. You're waiting 3, 4, sometimes 10 weeks to get a response. The way they get around that is they have this 10 or 15 business day window to respond to you. They'll respond with a deficiency. And often what I've noticed the City of London was doing was issuing, and this was not just me, by the way, this was other people that were sending me messages saying, hey, we got a deficiency on this stupid little thing. In my case, it was, this is missing from the drawing, send it back to us. Now they have unlimited time to respond. They can take 6 months, by the way, in this process. The clock stops as soon as they issue a deficiency letter on your drawing. So if you're on your drawing, it was, on our case, it was like something they didn't see. And the engineer responds back, it's on here on the drawing. It took them 14 days to acknowledge the email. Hey, it's actually in the drawing, you just didn't see it. So what we're saying for a month, stop work. When you don't have a building permit, you have to move forward, you can't until you get the building permit issued, you're just frozen. That sucks. 6 or 8 weeks where you're doing nothing, just paying thousands for mortgage and holding costs. That's brutal. That's dealing with municipalities. And sometimes municipalities say no. In general, they're like, hey, you want to put a unit in? No, we're just not gonna let you. We don't want that. The neighbors don't want it. Get a variance. Oh no, you can't get a variance, sorry. Sometimes the variance will cost you a year just waiting for permission to get the building permit. You gotta know your zoning bylaws. You've got to know what you can do on the property. You got to make sure you know your setbacks. A house could be 12 feet from the property line. It needs to be 12 and a half feet to be issued a permit for a duplex or a fourplex, or you want to change something in some way. Make sure you had a great consultation, and don't even rely on a consultation, because I've had consultations where they say, yep, we're in support of this. You sit with the city planner for an hour and they're like, yep, this is all good. And then you go to apply and they're like, actually, no, we didn't think of this. Actually, this won't work on this project. So that's development for you. That's when you change units. So I like to stick, when I'm flipping, I like to stick to stuff that I know can get done. I know paint, floors, cosmetic fixes, I know trim, all of that, doors, kitchen cabinets, vanities, just cosmetic change outs, basically, without ripping into the walls. You can make a space look entirely different. You can have a 6-figure lift project and still have no permits if you can avoid the structural stuff. So stay away from the basically opening the wall insulation in any way. Leave the vapor barrier intact. That's where you have an issue. You gotta repair some drywall, okay, but don't do any framing structural. Stay away from that, and your project will go much faster, much cheaper. So I sympathize with you. I've dealt with several of those types of challenges. So I know a lot of real estate investors that try to just find projects that, and I purposely go out of my way to find projects where I don't have to do that. So yeah, deal with the city, pain in the ass. I feel for you. I fear for you. All right. Hello, Eric. How you doing? Alan says, hey, Mike, when applying for multiple LOC, do you just apply to 30 in a week span? Is there anything to look out for when doing this? Thanks. Always keep you up. 30 would be a lot. I would say pick 5 lines of credits at 5 different institutions, apply for all of those at once, maybe. Yes, if you applied for all of those at once, they wouldn't show up on your bureau. In theory, you could get granted all 5 lines of credit. If they're all 50 grand, then 5 times 50 grand is 250,000 in unsecured credit. It would all go on at once and you'd be all good. Now try to apply for more after that. Once they appear on your credit bureau, good luck. They're probably not going to grant them to you. Sammy says, Mike, what time do you start the live? I always seem to miss the beginning. Sammy, I try for 7 p.m. Eastern Standard Time to around 8 p.m. Eastern Standard Time. Today, admittedly, it was 7:14 by the time that I got around to it. So apologies for being a few minutes tardy. But I got a lot of things, a lot of moving balls in the court these days. Hello again from Alberta. What are your thoughts on semi-detached homes, duplex with 2 separate titles? I like semi-detached homes if they cash flow. Oftentimes you'll find your duplexes and your semis, they have better cash flow. Now the downside of that is that the value isn't as, and the reason it's better cash flow is because the value is less, but the rent is similar. So someone will rent a 4-bedroom semi-detached property with its own backyard that shares a common wall, which is soundproofed. They'll pay the same amount of rent pretty much as a detached house if it's 4-bedroom. So the rent is almost the same, maybe plus or minus $100 for it being detached. But the price of that building is substantially less to build, and therefore the cost to buy that building is substantially less as well. So oftentimes 30-40% cheaper for a similar type of building that is attached on one side. And the rent is similar. So your cap rate is much higher because the building is cheaper and the rents are relatively the same. So that's really good for your ROI and your cash flow. So I love those kinds of buildings. I love that you can get it there for a discount. My second, I guess my first ever property I never lived in was a end unit, semi-attached freehold. Had no condo fees or anything, but it was a nice little walkout basement. It was a nice little duplex. It was a great property. And my property after that was a semi-attached. My property after that was semi-attached. And I turned the semi that I had, it was a bungalow on my half, I turned it into 2 units. So I had a basement 2-bedroom and an upper 3-bedroom apartment. And I did the same thing on the next one, and then after that. So I love semi-attached. That was one of the ways I started in the business, because it was so, I could buy in a great area of town, detached houses in the area were 400, and I could get a semi for 200. And there was a similar size square footage, and I could duplex that. And there was a new variance in town where I was allowed to do that. And I did that on one of the projects. We turned it into, I was one of the first to take a semi-attached bungalow, 3-bedroom, that had an unfinished basement, and convert it into a legal 2-bedroom apartment. Had a side entrance that went straight down. It was great. We did it with permits. It was, it was a big project. It took me almost, the project itself only took a few months, but the city issues with the minor variance, because again, on one side of the property, it's attached. So it has 0 setback, and the zoning bylaws didn't lay out any guidance around 0 setback from the lot line for those types of properties. So I had to tread new ground. And then luckily the secondary dwelling unit stuff came in later on, and I guess not luckily, because I fought and got it with the minor variance. But had I just waited, I would have been able to do it without the setbacks, because Doug Ford put in rules a few years back that they allowed duplexes in pretty much any property. So I love semi-attached. I think it's a great place to start. So my first couple of properties, I guess my first ever property was a detached house, but it was my second ever property was a property like that. So I remember them fondly. Been currently working with a realtor to structure the deal for wholesaling as a realtor. Even people I speak to get no idea how to structure it. So one way to deal with that is like, if you're around a wholesaling business, all you have to do when you buy something is buy it for yourself, have the intention to buy it for yourself, not to assign it, put an assignment clause in, and then use your disclosure forms. All I do is just say, hey, I'm disclosing that I'm a realtor to you and that I may have material knowledge that makes me have a competitive advantage and potentially means that I may be buying a property at a discount. And I put that right out in the disclosure and they sign it and I sign it. Done. There's a form, I think it's like 160 or 161, disclosure of acquisition, disclosure of disposition. It's all you do is just sign that with your offer. As a realtor, you can always buy and assign. Now, if you're running a wholesale business as a realtor, be careful because RICO will be up your ass real quick. Realtors do not like it. They will snitch on you. Other realtors will snitch on you when they see your marketing trying to sell the property. So another easier way than just disclosing everything is if you have a significant other or a partner, have your wife have a wholesaling business. And if she's not a realtor, she can assign the deals. My wife does deals all the time on the side. And I can make that introduction and get a referral fee, and she can handle the deal, and she's under no obligation. There's nothing that RICO can do because she is an individual that is not a licensed realtor. So she is not under the same scrutiny that a realtor would be under and could be sued for if they took advantage of someone or assigned a property and made a really fat commission. Because again, a realtor makes a commission, there's HST on that. A wholesale fee has no HST, it's exempt when you transact in residential real estate that's not new build. Big difference, big difference. Ken Word says, if I make around 85,000 USD per month selling courses, I have 3 employees, I live in Toronto. That's cool. By the way, selling courses it's easy, low-hanging fruit, especially if you have a good following and you have a good business space built. Like, I'm looking still for the right person to be a running mate on that and just blow that business up. I could do so well. There's so many bad courses. I could do such good work. I could make such great programs that actually help people to do well at flipping real estate and buying real estate and investing and all of that. And it's super scalable. Like, I could help 100 people at once. And if I took 20% of their profit, and I did it as a partnership profit model even. There's so many ways to structure it. You could sell as a fee-based, but another way is profit-based. And it's like, I could have 100 people doing what I do and make way more than if I just did it by myself. So there's huge scale in teaching other people how to do what you do and then collecting a small portion of the profit that they get as a result of that education and that knowledge. So I used to be against courses and against all of that. Less and less, depending on how you look at it, it's actually quite fruitful for everyone involved, and probably better for the people who are learning from you, who otherwise wouldn't have done anything with their life in a shitty 9-to-5 job making peanuts, right? And you can transform their life. That's impactful, and you have real meaningful impact on their life, and that's both feels good and is very scalable. It's hard to scale a flipping business. It's really hard, unless you have equity partners that are like trying also to, actively work in that business. Employees just don't care, and it's really hard to scale that business because the margins are so slim in flipping. Even like large companies have tried, and it's just, I don't know of any really, really large flippers at scale that have stand the test of time. Okay, what countries did you set your company up in? I don't know. There's a lot of questions involved in that, but one thing is, like, when you sell courses, there's HST involved. So if you're selling courses in Ontario, in Canada, you said Toronto, so you sell a $10,000 course, $1,300 of that is HST to the government. So if you were to sell courses out of the US, there might not be a tax. If you're selling out of the Bahamas, instead of a Bahamas Corp, there would be no income tax at all. Your corporation would just pay a 1% filing fee a year. You'd have barely any reporting requirements as well. And you could even open a Canadian or US bank account using that Bahamas active corporation, and just a thought that would allow you to be pretty much tax-free, as well as not have any HST sales tax on your courses. So I would definitely, if it's remote business selling courses, I would definitely not set up in Canada. I can't think of a good reason other than like financing maybe. If you want to get financing to buy some properties here, you have a lot better shot doing it. You know what, if you still want to get financing here, set your corp up in the Bahamas and pay yourself a salary in Canada if you want. Like, there are so much better ways to do this. Kenward, I would say probably relocating. You're saying you're approaching 500,000 in income. Talk to an offshore or cross-border tax specialist. You could probably move your business to Barbados or Bahamas. I like Bahamas personally, and you would have way better setup if you move your headquarters to the Bahamas. That's right, Sean. Definitely. SJ says, hey, Mike, I'm building a portfolio in Canada right now, but plan on moving to the US in the next few years. Would it be more tax efficient to buy properties in my personal name or my corporation? That I haven't thought through, but again, talk to your accountant. My gut reaction is that when you leave, if you're planning to leave tax-wise to the US, well, okay, so when you leave Canada, one consideration is when you leave Canada, you're going to have to pay an exit return. So an exit return is you leaving, you're deeming your residence is changing. And so Canada will say, hey, if you're not gonna pay tax in Canada anymore, because Canada taxes you based on residency. So if you move residence to US, you're no longer a tax resident of Canada. Canada won't come after any taxes. But if you have properties in Canada, you will have to pay tax on those properties in Canada. So whether it's in a corp or personal name, you're still gonna pay tax on those properties. But I will say that your exit return is probably worse inside of your personal name, because you probably want to dispose of those or be deemed disposition. A corporation is probably easier because again, you can leave and your corporation can continue to operate those properties. I don't know, talk to a tax specialist on that one. I'm trying to think of any like curveball that would probably in a corporation would make more sense. It would make it a little bit easier because you keep that corporation going and paying tax and you could leave and you wouldn't have to worry as much on, I guess it would still be part of your exit return, but I guess the value of your shares in that corporation would probably be valued, but have some more flexibility that way probably. First-time home buyer, could you talk about a few programs to buy? As far as like first-time home buyer programs, I'm not an expert on those, but you can do the 5% down on your first property. You can move again and turn the first property into a rental property and then buy another one at 5% down. The CMHC fees are 4% of the purchase price. So if you put 5% down, 4% is an upfront fee. So on day one, you put 5% down, you really have 1% down. They took basically 80% of your entire 5% down payment as a fee. So in Canada, the 5% down programs are brutal. The mortgage insurance is for life. In the US, you can call and get the mortgage insurance removed. It's paid as a fee monthly, the PMI. But in Canada, it's an upfront one-time fee. So if you refinance or you sell 5 months from now or a year from now, you paid all that fee for the life of the mortgage upfront. It's brutal. Canada just exploits first-time buyers. The programs are brutal. There's some cool RRSP programs you can borrow from tax-free, and then have a payment plan to pay it back. So that's a cool program you can take advantage of. They have a new Home Saver program. It's called HSA, Home Saver account. And that's kind of cool. I haven't explored it a ton, but it's a great way to save a down payment, tax-free. But yeah. Plan on buying property. Or says duplex, running as triplex. So you're probably 20 plus years means you're probably grandfathered, but look into it. You're gonna have to fight with the municipality to prove that it's been a property that was legal. If you can check in the zoning bylaws to show it was legal back whenever that was, that it was legal, that's helpful, I think, in your battle. But it will be a battle. They're not just gonna give it to you right away, but if you can maybe show mailbox, proof of address, leases, maybe old listings, all of that can help. Maybe there's some records somewhere along the way that can help. I keep getting different answers every time. Yeah, so it depends on who you talk to in the city. That's very common. Humans give different answers, and that's one of the challenges is how do you interpret the law or the rules. And there are grandfathering clauses in most municipalities that allow for properties that were grandfathered because the bylaws change over time. So maybe 50 years ago, anyone could put anyone can make a property in a certain area, duplex or triplex, but then they change the rules. And so if your property was one back then under the old bylaws, you would be allowed to do it. Under the old zoning, you'd be allowed to do it. So there's a lot of arguments you can make to get it grandfathered in. I've done that battle and I've won a few times where I was able to grandfather a triplex in and stuff like that, but it's always a battle. Michael says, do you prefer house flipping business or wholesaling business? I like flipping businesses better because the underlying tangible asset is, if I flip, depends on the kind of properties you flip, but if I flip investment properties that can cash flow, I like that if a flip goes bad, I'm all set. If you wholesale and you go firm and the buyer backs out, I know some people have had back out issues, you end up in a litigation for a long time and it can be a challenge. Whereas if you have the property, you're kind of all good to go. As far as like margins go, wholesaling is a way better margin business than flipping. You need a lot less capital and you can get way better returns on the money that you do invest. However, wholesaling requires really good buyers networks and again, really good finders networks. So you have to have a lot of fishing lines in the water, a lot of marketing campaigns, all of that to bring in leads. And then at the same time, you've got to have a good buyers list that's ready to go that will actually close on those contracts for you. So what I think the best thing to do is to have a wholesaling business and a flipping business and cherry pick the deals you don't want and do both. Every deal you take down, intend to take it down yourself and then try to wholesale it. If it doesn't work out, you just flip it yourself. I find the wholesaling is more juicy because you can make $40,000, $50,000 flipping paper, which is pretty awesome. So I like wholesaling over flipping, but I've been doing a lot more flipping lately than wholesaling. I'm in a phase right now where I'm focused on getting my health to the best place that it can be, and I'm putting my foot off the gas a little bit. I'm looking for some places I can park some capital and try to enjoy the summer. I've got a few deals I'm going to be locking up, and then I want to take a little bit of time to enjoy. So I'm in a mini retirement coming up here soon. So I like that I can step away from a flip business. I finish a few projects and I get a break. With a wholesaling business, it needs to be consistent. You need to be constantly marketing, constantly finding. It's a business. Both can be businesses, but yeah, it's definitely something that it's different. Port City says, what are hidden costs for new construction? I'm looking to buy land, do CMHC, MLI Select. I only put 10% down. Hidden costs for new construction. I mean, it's trying to think here. HST, probably one you're maybe not thinking about, but you get a credit back for some of it. There's always things that pop up, deficiencies at the end. So make sure you get your builders to remedy all those. Oftentimes you're dealing with deficiencies a year after you build. So there's a lot of things that'll pop up that you'll have to deal with. Getting into new construction, definitely a different beast than buying existing. So Port City, I've always found that the challenge with new construction is that there's not a huge lift on the buy. And because you're buying brand new, when you eventually dispose of said property, it's not brand new anymore. So you're buying brand new, but when you go to sell it 3, 4 years, 5 years later, you're selling a used asset that's been beat up by the tenants. And so it's just, you get a huge loss. Assuming all things stay the same, you get a huge loss on it not being brand new anymore. So that's one thing that kind of sucks about the new construction stuff, is that guess has no headaches in the outset, but down the road you have a bit of a value loss. Now the hope is that when you're doing these build phases, that when you get in phase 1, you deal with all the noise and the construction and the dust and the your house is covered in debris as they're digging up and excavating other areas in different phases. By the last phase, hopefully with appreciation, the last phase is going for more money and sets a new comp for you. You hopefully get a better overall lift. So there is a play for that. I've heard of that. I don't know. It's hard because in new build stuff, you're really not getting a huge lift unless you're a builder yourself. Now, if you're building yourself, you can have huge competitive advantages because, again, you're being the general contractor, managing all the subtrades, and that's passing on a lot of the builder's profit to you. But if you're hiring a builder, then again, unless you have a really great relationship, most of your profit on the bill is going to them. And so there's not much work you're doing, so why would you get a great return? As a real estate investor, the more problems you solve, the more you'll make. And so if you're solving no problems, you're speculating and getting a nice shiny new house, then not as good. Appreciate the tip on Tasty Trade. I've learned so much about options from their site. Hey, well, awesome. Glad to hear. Tasty Trade's an awesome website. They offer free options trading courses you can take anytime you want. Port City says, have you used the MLI Select program? I've not. It uses point system up to 95% loan to value or loan to construction, or up to 50-year amortization. You're talking about large multifamily. So with large multifamily new build, it is interesting because it's interesting out west too. So in Ontario, new build units are like $300,000 a unit, and used units are $150,000 a unit. And so you pay a 200% markup to get the exact same size unit, new construction versus old. But weirdly, like I noticed in Alberta, there's some, and even out west, there's some, probably out east too, but in some of the smaller, slower markets where there's high vacancy rates, some of these new builds are almost the same price per unit. And it's like, well, why wouldn't you want brand new if you're paying the same price? It's just because in Ontario, it's weird, but in Ontario, it's 200% markup to get the exact same building brand new versus exact same building older. So my market doesn't incentivize new build. Like in Toronto, you'll pay 500,000 a unit for new construction, really nice in a good area, where you can get, more beat up building for 200,000 a unit, put 20,000 in a unit and it looks like new. So that's where that's why I always went with the older stuff, is because again, like a new build house in London, Ontario is $800,000. That exact same older house and the same size is 600. So you're paying $200,000 more for the exact same size house, exact same lot. But I noticed out west in some of the slower, smaller markets, for some reason, the older buildings are trading at similar cap rates and similar dollars per square foot. And it's like, that's super weird. In those situations, 100%, I would do 5% down and buy some of these big new constructions buildings. Because again, why wouldn't you buy brand new when you can have everything brand new and 5% down? That's a huge win. So definitely, I'm interested in those kinds of programs. And if someone has a really good deal they want a JV or send my way out in Alberta that is has a great cap rate, I'm all for it. That's interesting to me. I love the program. I would love to be part of that program. And so if someone wants to send me a deal up there, I'm happy to look at it. You guys know where to find me. Okay, out east, you're bang on. There you go. So that's exactly what I was suspecting. Port City, I was assuming that it must be in one of those weird outlier markets where the new build stuff is the same pricing per unit or per square foot as the used stuff, which makes no sense in my mind why you'd buy used stuff in that situation when you can just buy brand new. Weird. In Ontario, it makes no sense either, but I guess the logic behind it is that all the foreign investors and all the people coming into Toronto and into Ontario, they like that new build, and so they pay a premium for it. There's just not a lot of new build stuff, not enough anyway. SJSJ says, Mike, you'd mentioned that you could be buying apartment buildings in Edmonton. Is this still in the books? Are you planning on buying a new build? I might send a deal. So SJ, send a deal my way. You know where to find me. My preferred email is probably rosehartcoaching@gmail.com or rosehartcapital@gmail.com. Either of those emails, I can get deals. Rosehart Capital is one I use more. Send my way. I'd be happy to look at it if someone has a good deal that makes a lot of sense. I do have some capital that I could park there into a good deal. I could take it out of my stock portfolio. Again, I'm so unsure with the current inflation environment. I'm so unsure. The NASDAQ is up 23% on aggregate. So some companies like Meta are up 100%. Intel's up like 60%. If you guys were watching my streams in December where I was like, buy Intel, buy Meta, you'd be up, your portfolio would be with double. So those stocks that I recommended when Meta was $90 a share, Amazon, Intel, all those companies were just super, super cheap in December. I was like, hey, why is Meta like an 8 PE ratio? It should be like a 17 PE ratio, and that's where it is now. But these companies, it's like maybe there could be a bit of a pullback this summer when I think that the market is pricing in a Fed U-turn soon. It's not going to U-turn soon. If it does U-turn, and it might actually U-turn soon. If it does, inflation's going to run. We're going to have wild inflation again, and it's going to be a battle for years to come. The good news is that hey, no problem, David. I'm glad you bought Intel at 25. Like a scrub, I sold my Intel at 30 for a small profit. Anyway, by the way, I'm glad a bunch of people have been messaging me about some of those tips. That's right. Sell in May and go away. That's what everyone says. Sell your stocks in May and go away because we're in for a rock every year. I would say that it's really important to, I lost my train of thought there. Intel, I lost my train of thought on that. I was going to say a point, then I lost it. Oh, right, inflation. So inflation, how it pertains to real estate and the stock market. Again, NASDAQ being up 20-something%, having one of the best quarters in a decade. I don't feel so good. The data doesn't feel so good when you look historically at how an index performs after having a more than 20% growth in one quarter. The subsequent quarters are usually not as strong. Either we're in a bear market, in which case we have a huge pullback and we test new lows. That's a real possible outcome. I don't know if it'll happen, but remember the NASDAQ lows are like 25% down from where the current price is. That's a big drop. We could see. That's a potential possibility. If the Fed doesn't U-turn, if they U-turn too early and inflation comes back, we're in for a world of hurt and pain, right? So we could be in a bear market rally, could be in a kangaroo market too. Are we in a new bull market? I'm not convinced. But I think that over the long term, what we're seeing is that inflation is running higher and for longer. And so what you want, the way to protect yourself in this situation is don't have cash. Cash is trash. Don't have cash. Deploy your cash in assets that appreciate in cash flow. You want to get a great consistent return on your money. I like real estate as an asset class, as an example. And I like real estate because you can put leverage with it. I like that you can go borrow and put in 20% down and the bank puts up 80%. And so if we have 10% inflation and you borrow from the bank at 5, then 10% inflation over, the next year, possible, maybe. I don't know, that situation could happen, right? Over the next 10 years, I think that inflation probably outpaces the cost of debt. And so, again, having debt is good. When inflation, over the long term, inflation is going to continue to run at a higher rate than the cost of debt. Right now, it's actually a little bit of an inverse. So soon it's going to be either pain, so either inflation is going to come down, rates are going to come down, or rates are just going to stay high and inflation is going to come down. Or the other reality is that inflation comes down and comes back up, and then we're stuck. There's another possible outcome, which is that they lower rates and then inflation goes wild. And in many of those situations, real estate wins over a 5-year period. Pretty much all of those situations, over the long term, real estate is going to win. And I like it because it's an asset class that, again, with good, cheap debt attached to it on a strong cash flowing asset, you win. And by strong cash flowing asset, I don't mean a 3 cap, 4 cap, 5 cap, garbage. 10 cap, solid properties that are outperforming the cost of debt significantly. Those kinds of properties are the ones you want to have in your portfolio. That's money. So yeah, that's my thought on that. ETH, yep. Okay. There we go. That's all the questions, I think. I don't think I missed any. All right, guys, I had to wrap this up. I'm going to head out. I appreciate you guys so much for coming on tonight, and I will see you next week. Remember, the secret to unlocking a wealth through you is 3 steps. Three levers in your control of your financial future. Spend less, earn more, and maximize returns on the difference. That's all you got to do. You got to find ways to cut from your budget. You got to find ways to earn more. You got to find ways to maximize the difference between what you're earning and what you're spending. Hopefully you get that spending down to a reasonable amount. If your income's too low to get your spending down to a reasonable amount, like 50% or less of your total income, you need to make more money. So thank you everyone for watching. And if I provide you some value tonight, one thing you do for me is like when someone finishes presenting, you clap. In this case, you hit the like button. Slam that like button for me and drop a comment after the video goes live. It helps the audience find the video later. So if you're watching the replay, hit the like button and go ahead and leave a comment. Thank you so much. Have a good night. See you next week. 7 to 8 p.m. Eastern Standard Time.